But with that, it's time to focus on the first corporate conversation on the show. And it's coming in actually from the pharma space. We'll get to it in just a minute. We should be having the management of Aurobindo Pharma with us in just a bit. You know that the stock in the company has been on the radar. There have been reports about, the potential inorganic growth at Auro Pharma. So let's find out if this is indeed happening or not. The company has been in the news for looking to acquire Prague-based Zentiva for a valuation of as much as $5 to $5.5 billion, which could be one of the largest, M&A deals that we've seen in India. Mr. Santhanam Subramanian, Chief Financial Officer of Aurobindo Pharma, is with us. He's with us on the phone line to take a couple of questions. And three important points that we're looking at is whether the company indeed is looking at that acquisition or not, and of course, what the business outlook is. Mr. Subramanian, thank you so much, sir, for taking the call. And that's really the first question. There's a lot of excitement in the market. Are you looking at this Prague-based entity, Zentiva?
Thank you, Vinay. See, the company as a policy, we don't comment on the speculative news articles. Okay. So having said that, we at any point of time evaluate multiple acquisitions and inorganic growth opportunities. Because as a global company, almost all acquisitions in the generics and our product space does get shown to us. We are extremely mindful of our investor concerns and have never overpaid for an acquisition.
Okay. But, sir, can you give us some more color on, you are clearly looking at inorganic opportunities. So what areas, what are the product synergies, and whether this particular company, Zentiva, whether it somewhere fits into your overall strategic scheme of things?
Now, of course, as I said, as we given the clarification to the stock exchange yesterday, it's in the too premature stage and it's very difficult to talk about it. Having said that, we are a global company having major presence in US and Europe, and certainly this asset being placed in Europe, it does fit into our scheme of things.
Okay, so that's an implicit. I'm not going to say it's an implicit yes. You told us what you wanted to say.
I think we have been seeing many assets. It doesn't mean every asset we are buying it out.
Of course. You mentioned that word concern, Mr. Santhanam, and that's the Subramaniam. So $140 billion in net cash. The size here is about $5 billion. The concern is, managing the size of this acquisition in terms of leverage, etc. So would you want to address it?
No, it's not a major issue. I'll tell you why. We have been growing, and every quarter we have been, if you really see the last 3 quarters, every quarter we have been generating about 100 million cash every quarter. And we have enough balance sheet strength, and today, as on date, there is no leverage at all. And we are having an overall cash of around 140, and certainly this cash is expected to go up. And any acquisition will look into the multiples, EBITDA multiples, and whether it is a EPS accretive or whether synergies are there. All these factors we'll take into account, and then we will do that.
Wouldn't this make Aurobindo highly leveraged, Mr. Santhanam? I mean, this acquisition, if this were to go through in this shape and size, what we're hearing, but of course reports.
No, it is not leveraged at all today.
But if you go in for this with $140 million of cash, $5 billion size acquisition on the other side, I mean, the gap is too large. You'll have to raise a lot of debt, right?
No, it all depends upon the business also. No, it all depends upon the business and the ability to generate cash. What is the EBITDA? What is the synergies? Everything you have to look into that. No.
So, sir, you are not ruling out the possibility of looking at an entity where the size could be as big as $5 billion. You're open to looking at something as big as this, right?
Yeah, nothing wrong in that, no.
Okay.
All right. Mr. Subramaniam, hi, this is Ekta. Just wanted to narrow down on the size because there is speculation that it might not be $5 to $5.5 billion, and there could be a 20 to 25% discount to this valuation. Is that correct?
We don't want to comment on the speculations at all. Now, first, we are not commenting on the overall big numbers, which you have said at the beginning, and now you are saying whether it will be right at 25%. So we don't want to comment on this, actually. But we will, whatever we do it, we will see there are 3 guiding principles we adopt. We will see as much as possible, we will ensure that EBITDA multiple is always single digit. That is the first. Second, we will see whether how it is accretive, EPS accretive at the earliest. So we will look into that. Third, what is the significant synergies we'll get from any combined operations? We'll look into that. Without these things, irrespective of even if the value is very low, also we may not touch it.
Sure.
So these are all the guiding principles. We'll work on that.
So that is exactly the concern, and I want to revert back to the fact that, the street is concerned about the fact that this is a European-focused business. The company might lose focus when it comes to, say, its core business of US operations. And again, the debt is going to be a concern, especially when the company is operating at margins of 19 to 20%. So would the company probably reconsider such a large size in terms of an acquisition based on the feedback that you're getting?
You must be knowing, if we are really seeing how we have been operating, each verticals have been identified and it has been operated by an independent CEO. It doesn't matter whether if I grow Europe, it doesn't mean US is getting a back. Not getting the importance. Or if US is growing, it doesn't mean Europe is not getting an importance. Not like that. Every vertical, every market is having a different set of management, CEOs, and they will ensure that the businesses in their domain are growing without any impacting the other businesses, other verticals.
All right. The other point I want to narrow down on is Europe, because you have evaluated Sanofi's European business in the past, if I'm not mistaken, and now you're looking at Zentiva. Why is Europe becoming such a lucrative option for Aurobindo? Is that because you want to mitigate your risk when it comes to the US simply because of the kind of uncertainties you're facing there?
Nothing like that. We just completed the Lannett deal in US itself. See, 75% of my business comes from US and Europe. I have to do it there only. Unfortunately, or whatever may be, we are not having a major. We are not even having a good presence in India market. So other 2 markets only are there for us. We have been doing it there.
Mr. Subramanian, 2 questions, sir. One, how much of what you sell in the US currently do you produce in the US?
I think whatever we are producing in US, mostly produced in India only, but we have a plant ready in US which can produce around 15%, can go up to 25% also ready. We are waiting for the approvals. Product approvals that come, we are waiting for some other approval from the regulatory authority. Once it comes, I can start in Q2 end or Q3, anytime I can start.
Okay, so you have the capacity which...
Lannett acquisition also we had, which is having a capacity of around 4 billion units. Today they are using only 1.5 billion units. So there is a scope for 2.5 billion units, and plus with a very minimal capex, in very low double digits, I can take it to another $1 billion capacity. So I have the flexibilities and options to increase my manufacturing capability in US if required.
Right. Now, my question is, by the end of this year, FY26, if you sold 100 rupees worth of products in the US, how much of that 100 rupees can you make in the US by the end of this year, say after these approvals, etc., come through?
I think it's off the cuff. I don't have the ready-made answer, but off the cuff, I can say I may be able to do around 30 to 35%. I may be able to do that.
Okay, 30 to 35%. Just one last question from my side.
I need to validate the number. I don't have it. Right.
Off the cuff, of course. Just an estimate. There was an order from the White House a couple of days back. I think this was last week, which essentially mandated that US, in terms of critical APIs, US needs to stock up on at least 6 months. They need to have 6 months worth of stock. Does this provide a fillip to your business, sir?
Yeah, because we are always having, at any point of time, we try to maintain more than 3 to 4, around 3 to 4 months stock always. So it's not a major issue for us.
Mr. Subramanian, if you could just, going back to Zentiva, could you tell us, we're not saying that you've, narrowed on the target and whether you are or aren't doing it, but As of now, you've studied the company, you know the business. What is the complementarity, if at all, and what is the revenue sort of potential? And what about the profitability of this entity? Can you tell us a little more? Because this is something you're studying, so it would be good to share with your shareholders.
I mean, your questions are very relevant, but see, whenever we talk about any business or target, etc., we enter into confidentiality agreement. So I'm not supposed to talk about the numbers.
Okay.
Your question is very relevant. I mean, you have the relevant question, no doubt.
All right.
But sir, by when? I understand you're saying you have entered into a confidentiality agreement. So that confirms that indeed those talks are on.
No, when you enter into NDA, only you will get the information memorandum.
I understand, sir. Sir, by when? How long does this agreement start? Till when will you study this target? By when can we have a definitive yes or no?
I think, as you said, it is very premature. Maybe it may take another 2 months' time.
Mr. Subramaniam, just one question. But if you're interested, you will pay a single multiple, right? EV upon EBITDA, because as of now, $5 to $5.5 billion for an entity that's making 467 million comes to around 11 times. But I think one of the comments you made was, if you're interested, you won't pay in double digits. You'll pay high single digit, correct? EV upon EBITDA?
I think you're right. Absolutely, your calculations are right. And
correct. So then that will be around $4.3 billion if you're interested. If you're interested, you'll pay less than 10 times, which will be around $4.5 billion, very, very roughly.
Can I complete?
Yes, sir. Please go ahead.
I do not know about the accuracy of the numbers, so I cannot comment on that.
Okay, sir, just before we let you go, give us a sense in terms of the kind of debt that Aurobindo will be comfortable to have on its books. You ended Q1 with $884 million in terms of gross debt. How much are you willing to have on your books in order to make such a huge acquisition?
I think what we can see, we are also sitting on a cash of around $900 million cash is also sitting on the book, right? Yes. Both in Europe and US, all put together, we are sitting on a 900 million cash. So long it makes sense. I mean, debt is not a major concern because we have been generating cash quarter on quarter, and we are confident of generating cash. And our ability to bring debt at a very low price is all there. We will be able to bring down debt anything less than 5% significant. I mean, 5% to anywhere between 4 to 5% should not be a problem. Right, and there are bankers who are very, very, very happy with our balance sheet, the way we manage the things. So debt is not an issue at all for us.
Okay, just before we let you go, I wanted to just get your sense on three things. One is your status on the UGR3 plant, which has an OAI, as well as your New Jersey plant, which has an OAI. What is the status of remediation for those, as well as your Pen-G facility? When do you expect it to scale up and break even?
Okay, the first question, UGR Plant 3, you already in our earnings call, we said we have invited the inspectors to do the inspection, re-inspection. So as and when it happens, we will let you know, okay? The second thing is, in terms of the US facility, we said the product approvals that come, etc., we are waiting for some clarification or some approval. We can start anytime in Q2 or Q3, depending upon when we want to do that. Subject to getting the necessary regulatory approval, we can do that. In terms of Pen-G, yes, we have done really well. I mean, we have been ramping up really well, and the productions are improving day after day, every day. So I think, as I told you in the earnings call also, Q3 we will come and, we will be able to demonstrate very good numbers for the Pen-G, as I told you.
All right, Mr. Subramaniam, thank you very much for taking our call and patiently answering all our questions, and really appreciate it. And we hope you'll come back on again when you have something to announce. As you said, right now there's an NDA, so you can't disclose very much. But I think we got a broad sense of how you're thinking about this entire situation. Ekta, thank you very much for taking us through that conversation.
Thank you.